I'm tilting my portfolio. I'm focusing on growth. Yes, I want to beat the S&P 500, and I don't have to do that by chasing all individual stocks. We're going to take a look at some funds that I'm incorporating for that extra growth potential. This is one of my Fidelity portfolios where I'm putting in that work. There's a few shares of FXAIX over here, about 16, but that's a core investment. We'll be taking a look at the others. Right now, I have 185.5 shares of SPMO, and I'm up about 9%. FSPGX, 100.4 shares, and I'm up 3.6%. And SMH, 1.45 shares, and I'm up 17.6%. These are a few of the funds that I'm using to boost my portfolio. Now that I have strong positions in funds like FXAIX, I have 751 shares in another portfolio that I often share updates on, as well as other positions in more conservative mutual funds, as well as target date funds. But now I'm incorporating these investments so that I can have that potential to beat the market returns without gambling. So I'll be bringing in investments like this in order to build up my growth layer, as I call it, by having 10 to 20% of my portfolio tilting towards positions like this that are going to give me innovation, momentum, high performing sectors. This is where I'm going to capture extra growth from AI, cloud, semiconductors, those large mega cap companies, overall innovation and momentum, which is the focus of SPMO. Let's start by taking a closer look at FSPGX. And that's Fidelity's large cap growth index fund. I've been comparing this to a VUG, SCHG, or SPYG, a fund focused on the fastest growing companies in the US. FSPGX, it owns those large cap companies, NVIDIA, Apple, Microsoft, Broadcom, Amazon, Tesla, Google, Meta, and Eli Lilly. But as you can see here, it's more concentrated and more heavily weighted into some of those names than we see in FXAIX, which tracks the S&P 500. Just to make two comparisons, we can see that NVIDIA in the S&P 500 fund has a weighting of 7.57%, while in the growth fund, it's at 12.91%. And then Apple in the S&P fund, FXAIX, a weighting of 6.66%. And then in the growth fund, FSPGX, we have a weighting of 11.63%. So more of an opportunity to capture the growth of those big names. These are companies that are building on the future: AI, cloud, automation. FXAIX gives me that foundation, while FSPGX gives me that growth tilt that I'm looking for. But just like FXAIX, still a very low expense ratio. FXAIX is 0.015%, while FXPGX is just slightly higher at 0.035%. I'm always focused on making sure I'm keeping my fees low and my growth high. I want to maximize the compounding power when it comes to building my portfolio. In 2026 and beyond, AI will be impacting these companies. NVIDIA is not the only company dominating. Microsoft, Amazon, Meta, all of these companies are expanding and using AI to their benefit. In time, Apple will be catching up also. So by incorporating funds like this, I get the simplicity as well as that higher growth. I am Lisa J. Stocks, and I'm here sharing my personal journey to build wealth. If you're not already, subscribe, like, hit that notification bell, and join channel membership to see even more detail across my portfolio, access to members only live streams, and more. Okay, next up, let's take a look at SPMO, my momentum ETF. And this one has definitely picked up. It was trading sideways for quite a while, dipping down as low as $111. But that's when I really focused on putting the work in, buying full shares instead of my regular daily dollar cost averaging. This fund rotates into the strongest companies in the S&P 500 based on momentum, holding just the top 100 companies that fit that criteria. It's not guessing, it's not predicting, it's following the data. When tech is strong, it loads up on tech. When industrials are running, it shifts into those industries. Energy, whatever sector, it's ready to capture those gains for you. And then we have SMH, the FXAIX Semiconductor ETF. A new position. I just have 1.4 shares and started investing into it at the end of January, doing it as a part of my challenge, $10 daily for 10 weeks, but I've kept it going and I'm already up 17.36%. Here's a look at the top 10 holdings of both of these funds. Again, many names that are ready to get on track with this AI revolution. Pretty much nothing works without AI chips and a lot of what these big names hold. There isn't much overlap when it comes to SPMO and SMH. Just 18%. SPMO focusing on wherever that momentum is, financials, communications, as well as tech, while SMH strictly technology. I definitely plan on holding these for the long term. So let's take a look at the performance on some longer time frames. Over the last 3 years, FSPGX up about 97%, SPMO 132%, and SMH 279%. And over the last 5 years, FSPGX is up 88.3%, SPMO about 141%, and SMH 294%. Also, here's a look at those expense ratios on all three of the funds. SMH has the highest at 0.35%, SPMO at 0.13%, and FSPGX is at 0.035%. So when it comes to these investments that I'm incorporating for that higher growth, I'm ready for them to potentially fall faster and rise faster. I've been putting in the work on those red days because that is my philosophy. Red days are buying days. Do your research. Know what you want to have exposure to so that you're buying low, building up your positions so that you're holding when the recovery occurs. What I'm doing over here is not taking any days off, not freezing, dealing with what the economy is giving us, finding a way to work it to my advantage. And that could be just as simple as continuing to build because I know the stock market will continue to grow. These companies will continue to thrive. This is not trading. This is investing. It's a long-term thing. So I'm working on building up my investments, staying invested, seeing the growth in my portfolio, knowing that I'm doing my best to get ready for retirement, early retirement, having investments that I can take profit from for whatever the future holds. So these are a few of the funds that I've chosen to bring this additional growth to my portfolio. Make sure to leave me some comments. Let me know your thoughts on how I'm going about it, building up positions into SMH, SPMO, as well as FSPGX. What are you incorporating in your portfolio to be your sails on your ship to give that extra boost? And what are those anchors that keep your portfolio stable? Less volatility, big swings, low cost funds with that steady growth and stability that I believe every portfolio should have. Today's not one of them, but so far in 2026, I've survived many red days, had many limit orders hit while I was busy living my life. And now I'm starting to see the gains in my portfolio, but I'm always here sharing, even if I'm not deep in profit yet, like you've seen in the positions that I've shared today, that are newer investments that I just started building in late 2025. So thanks for watching. That's it for today's update. Make sure to like, subscribe, hit that notification bell, hype this video, leave me lots of comments. Check out my referral links for channel membership, the MooMoo Investing app, as well as KGU, Keenan Grace's Discord. And check out another video on the investments that we took a look at today so you can see the progression of how I've been building. Okay, bye.